Great evening, everyone, and welcome to Trading with OC. Finally, we got things working. Yesterday, it was just a headache, and also today in the morning, it was also a little bit of a I don't know, of a puzzle. Well, comments were not playing out with me. I don't know what got into YouTube, for God's sake. But finally, I think just how many times I smacked the computer, finally the damn thing start working. Nonetheless, guys, I also did a quick overview on the markets yesterday. Since we were not able to go live, I decided to anyway do a little bit of a recording and upload it on the Discord channel. So I uploaded for everyone to watch and to see. So if you did not check out yesterday's session, go back and check it out right after today. So, but let me get started with you guys, because you guys are the most amazing community ever. Also, big shout out to Frank the Tank that yesterday was touching on me to see that everything was fine. Thank you, my friend. Really appreciate it. Thank you very much for your interest, and of course touching back to see if everything was all right. Also, Indie Rock Crypto, first one in the chat. Welcome, my friend. Thank you so much for stopping by. Double shout out to Frank the Tank. What is up? Shout out to Jesse. He also says, where are my puppies? Not quite there yet. Being trained. maybe we can show them how to trade some crypto. We'll see how that rolls. Let me not make some promises in there. All right. Let's see. Who else we got in here? Jesse, of course. Crypto Trades, what is up, my friend? How is it going, bro? LOC in the house. Thank you, my friend. Thanks so much for the shout out in here. Really appreciate it. Also, we have Mohammed Risks. What is up, my friend? Welcome to the alumni. Atlas Prime, what is up, brother? Welcome in Trading Tuition. What's up, my friend? Always here in the chat. Thank you so much for your support. Really appreciate it. Today in the morning, I also went back just out of curiosity because for me, the comments, they did not show it out. But I did win after it, and it seems like they were actually playing out. So I don't know what the heck. But nonetheless, thank you guys so much for stopping by. Let's get it because, I mean, I actually was, let me be honest here, I was pushing this, this chapter just a little bit more because I wanted to invite Piper and give it to me, but since he's busy with his life and also making he's moving all around, well, I also did not want to push him that hard, and also I didn't want to make you guys wait. So what we're gonna be doing is I'm gonna be giving this chapter in two sections. So we're gonna be looking at retracements. Then we're going to be looking at extensions. And finally, we're going to be having Piper's masterclass on Fibonacci. And he also is going to be showing you guys how to use his tool, his strategy, his personal strategy. And also, when these courses are over, we're going to do sub-specializing courses, right? The point is that I get with the best of each tool, right? That single best trader that uses the tool and he makes money based on that tool, right? And then I'm gonna be asking him, inviting him to show us how he used it, to reveal his secret. We're gonna be pushing it into, specialized sub courses. So that's gonna be for you guys. Nonetheless, that way you can go in. If you want to become just a profitable trader, you can watch the first section, which is basic trading with no indicators. Then you can come in here also and watch how to become much profitable with free indicators. And then, all right, if something resonated with you, right, maybe you like support, resistance, as you want a little bit more in depth, well then, or if you like Fibonacci, or if you like MACD, or any other tool that like sounded with you or resonated with you, well then we're gonna be offering you, of course, the best of the best with a specialized crypto traders that will be teaching you those indicators. But that's gonna be the next step. I'm revealing this so far because we are getting at the end of the courses. Let me give you a heads up right here. Give me 1 second. And we got, what is it? Here it is. All right. We have 21, no, 20 chapters, and we're on 18. So we have one more, two more, and that would be it. The basic training from going to zero to hero, it should be over. So it's getting excited, guys. Next upcoming is going to be actually MACD and RSI. And finally, we're going to be explaining divergences in depth because you could actually just play or trade just based on divergences. I don't advise that. As always, I never advise using one single indicator or one single strategy. I always advise to put 3 different confluence points to create your strategy or to create your indicator setup and trade based on that. Always market structure. We have Harp in the house. What is up, brother? Welcome. All right. So let's go ahead and let's kick it back into the charts because we have a lot to take and I'd want to make this as easy as possible. Let's go into the charts. All right, let's get started first where we left out. I think that's going to be good. Let's go to the 4 hours. Now that we are in here on Bitcoin, let's do our casual analysis. So remember, we were taking this trade. Our next entry was somewhere around here for the breakout retest. What happened? TP number one, I was expecting a further move to the upside. And then what's going on? It seems like we are making a bullish flag, a pretty big, not gonna lie, bullish flag, something like that. Remember that we've been talking about morphology. What is morphology? Is a very fancy word for just saying, all right, one pattern can turn into another. So we need to be careful and trade based on what other patterns could it transform, right? Not because at the first glance it looked like maybe a double top, right? As an example, we're just gonna be crazy shorting the thing because when it comes back up, it's gonna get us hurt, right? So we need to forecast what might be looking or how might be looking in the future and act accordingly, right? So let's go over here. And so far we are respecting these lines. Seems that I just draw them, just so you know. That is based on this last candle. We could be at the end of that pattern. That is, look at that big candles on our RSI prime. And if we take a look at our prime oscillator, we are in bouncing areas, not gonna lie. But so far, I want to give it just a little bit more time because right here, we have our first leading candle, right? This is a doji candle. What happened next might be defining a possible, remember when we talked about candlestick patterns, right? Remember one of those patterns, and I urge you to look into our sessions, right? We looked into one of those patterns. There was an engulfing candle, right? With its little things in here, right? So like this one, and then we have a doji candle, and finally we have another engulfing candle. If you guys don't remember, I'm gonna leave it to you to go watch the candlestick patterns. Remember, we have two videos, basic candlestick patterns, where we teach you what is a candlestick, right? How is a combination, is more popular combinations, and then we have candlestick patterns, advanced class, right? Watch them both. I give you the introduction, I completely explain you here, and also I give you a couple of examples, right? Once again, I'm not saying that this is going to be a bullish candle. What I'm saying here, it is that we need to consider the morphology of the pattern, right? So what is the morphology? Let's go back in time, and let me take this into consideration, right? Let's not forget about this, but let's go back in time from to yesterday. Let's go to this. No, I do want to save this. All right, let's save this. All right, perfect. Let's go in here. And finally, let's go here and take a look at this area or this chart. Perfect. Yesterday, remember that we were looking into a possible bullish flag. All right, you see how that went? And what was this? Our next possible area of entry. Where are we right now? And this is the 1 hour, right? Then looking at the 4 hours, we looked at the same pattern, right? Yes, we have broke it. And depending on the next candle, we could be forming the flag, or we could be just going through this one for a sweep of the lows. And that's what I'm going to be looking for, maybe a flip of the ribbon. You see how am I using my past data with the morphology concept, right? Let's go back to our trading scenario here. Let's open anyway, right? Let's go once again in here, right? Let's give it some time, and that is it. Remember, let's go back in time to yesterday. Yesterday, this is what we had. It's not about the breakout. It's about maybe the retest, right? And when we are in here, we could be looking for either a continuation, or if we actually blast through back inside the triangle, well, not only we know that this was not an actual triangle, right? That was a range, but also we could be expecting maybe at that point a higher low, right? And maybe that burst out of the flag that we were that now we are expecting. All right. So once again, It's not that I know the future. It's not that we nail those trades based on this is it on our first analysis. Is that we put the work behind it and we follow the same pattern that we've been talking about since the beginning. We look first, remember, we zoom out. Oh, there's a cable. Let me just get rid of that. Sorry about that. We zoom out, all right? We zoom out. As always, remember what we're looking into, which is, let me just clear this up before we continue, which is a market structure, right? Something interesting, it is the repetition of a flat positive bullish continuation or the repetition of a top, all right? I don't want to urge you into a topping here, but if we have just quite enough market cap, this could become a localized top for a huge flat pause of bullish continuation, right? How would that look like? Let's go to a cleaner chart in here. Let me see if I have something in here. All right, perfect. Remember that first point in morphology, we were looking at a possible double top. Remember that? Is it playing out now? This is the 4 hours Bitcoin Binance, right? Seems like it, right? But remember, this is the bigger picture. Right now, just quite a second ago, we were analyzing just that itty bitty part. You see how now things start getting or having a little bit more sense? Let me clear this up and let me repeat this part. Remember, zooming out, right? Once we zoom out, we see that we have a trend line. Remember, when we broke the trend line, I told you guys, the trend is broken. Remember, we are not longer bullish. Bullish overall, yes, of course, right? But the bullish trend right now is doing something, right? Just like, for example, in this trend, when the trend line was broken, we were not longer bullish until what happened? The dynamic reactor or our SMA combo came and met the price action that was flat or basically retracing over time and not over price action. What happens in that point? We come back at the bullish state and we blast. Once again, we range, right? We blast. So is this maybe a big range for maybe a flat pause, like exactly same thing in here, but in bigger? Like, could it be, right, that we're doing this? You see how I grab that and then I push it over? Like, I mean, this is a real possibility. Because don't get me wrong, we tried to do it in here. Remember that? In fact, we're keeping track on this same moment, right? On this same pattern that happens, right? So, and this is the same one that we looked back in time. I mean, in having that pattern is nothing new. I mean, look at how long this took to actually burst to the upside, right? I mean, this is not something new. We have seen this in the past. So is this comes to a surprise? Really? I mean, we can absolutely do this forever, right? And look at the retracement. Not only that, we've been following on this retracement. And this is where I'm going to be opening up the introduction to the actual retracements. Let's remember here. How do we measure our possible retracements? Remember the box thing? Remember how easy it is? Basically grabbing the very bottom or the breakout retest and then aiming at the top, right? At the very top. And then what we're looking for, the 50% line and then the 1/3 line. Remember that? All right. Let me see those thumbs up if you guys remember this. This is a very simple concept that we've been learning since, if I'm not quite mistaken, chapter 10 or something like that. I think that's where I introduced this concept. Very easy, very fast, and look at how well does it holds its ground, right? So either 50% or 1/3 being very, very spot on, right? Thumbs up if you guys remember this strategy. Please let me know. Let me read you guys in the chat. Let's see, what am I missing? Okay, DGT, what's up, my friend? Welcome. Califan, welcome. All right, guys, help me out in there. If you guys remember that, the boxing here that we've been also using for those kind of pullbacks, let me know. So let's do one more exercise before we move on. All right, let's go back in here. Perfect, Jesse. Thumbs up, nice. All right, and let's do our very bottom. All right, to our very top in here. What is our 50% mark, right? What is our 1/3? And look at that, it's been almost playing like a charm. So this is gonna be a very nice entry, right? Or if we range, we could be looking for maybe a 50% entry here. Let me go back into this candle pattern, and then we finish up the introduction for the Fibonacci. So just so we finish up what's gonna be happening with Bitcoin, this candle is gonna define if we create that or if we break through, right? Or if we just make a simple candle, which basically counteracts this doji indecision candle. So the next candle is very important to tell us if this is still meh, or if this is a retracement, or this is a breakout. All right, perfect. Coming back to the box, let me just get rid of this. Coming back to the box, remember how easy it is? So we usually look at that box for what? For possible retracement by measuring a trend, right? Let's bring up another Bitcoin, BTC, USD, Bitstamp. Let's grab this one in here. Perfect. I think this is gonna make it. All right. Let me just get rid of these things, and also let's measure different movements. For example, it's not about the breakout, it's about the retest. Any of these movements so far, right? We can go back in here. There we go. From here, from the top of the movement, right? Or that's it, from the top of the movement, where we think is the top of the movement, and we look at the 50% and add a 1/3, and look at that. That 1/3 plays out fantastically, right? Phenomenal. So what do you think it's a retracement, a Fibonacci retracement? Well then, let me give you a quick explanation. A Fibonacci retracement, it is just a concept. It's not a concept. It is a mathematical equation that defines many things that happens in nature. Just so you know, kind of like the overall of a Fibonacci retracement, let's grab one unit, all right? Let's just say that this is a unit number 1. Let's just call it a 1, right? So what happens if we clone this one and we add it next to each other? We have 2. Therefore, the next one that we clone, we can actually pelt it up like this and have a 2 by 2 that is backed up by this one. When what it happens, it's creating another 3 to my side. You see that one? So let's create that box in here. Oh, it was this? Yeah. And then we can see a whole unit of a 3. But then this same thing creates a 1, 2 plus 3 equals 5, right? So now we have a 5 times 5 unit. Then 5 plus 3, how much we got here? 8, right? So at this point, we have a 8 by 8 unit. So you see this incremental box? If I start drawing stuff in here, you'll see that this gives me a very particular drawing. Let me see if I can find my pen. Here it is, right? And we can start maybe drawing it from here, going somewhere around there, right? Somewhere around here, somewhere around there, somewhere around here, right? And then finally something around here. And you'll see that if I keep going, I'll start having a very incremental spiral, right? You'll see that this ratio, which is the golden ratio, it is used in architecture a lot of time, right? But also, if you follow the same pattern that you see here, which is 1 plus 1 equals 2, right? Well, then you take the last two, then 1 plus 2 equals 3, and then you grab the last two, right? And then that gives us what? That gives us 3 plus 5 equal, sorry, 3 plus 2 equal 5, right? And then you grab the last two, and as you can see, it creates the same thing. So you just need to add one after another, and this creates an increasing equation, right? What is an increasing equation in this case, right? And let's not nerd too much into it, right? I don't want really the nerdy stuff. Well, it seems like we have a unit and then we times 2, right? Well, that unit times 2, that will be a 1 plus 1, right? And then what happens, this is a 50%. So what's going to be maybe the 2 plus 2? What is it represented from that unit? Yeah, right? Do you see how much of a percentage that's going to represent? So if you take a look at how we represent percentages out of the one unit as we grow in multiple units, right? Every bigger step, it is a smaller percentage out of or based out of that unit, right? So just bear in mind that percentage stuff, all right? Perfect. So let's go back and do the little box measurement from the bottom to what we think is the top, right? There is it. And what are we looking for? Retraction, rejection, retraction, right? Or retracements. And very funny, why is it that our Fibo, it's Fibo retracement? You see that? So in this point, let me make something clear in here. When we draw our box in here, very simple, I was teaching you how to drew a Fibonacci retracement tool without even you knowing that, right? So you see how easy it comes to our mind? So, Nerd 22 says, yeah. Sorry, I'm dying here. So, what is the 50%? What is the half of this unit, right? So this is the 50% retracement on a Fibonacci scale. And did we talk about Fibonacci? Did we talk about units? No, of course we didn't. Because our main area of unit, and again, this is a little bit nerdy, but this should be your first box, right? Or your 1, 2, plus another 2 box. You see that? So what's going on if we just keep going like that? Eventually, we usually hit the 50%, right? So you see how just a single box, a single equation can be now represented with just a simple retracement, right? Simple, right? I know it went a little bit labyrinthic at the beginning, but at the end of it all, if you drew a box, you just look for the 50, which is half of it, and 1/3 of the retracement. This 1/3 of our retracement, guys, let me know in the side chat. And extra kudos, I'm gonna be double shouting you out, of course. If you can tell me what is a 1/3 equals in percentage. We have a little bit of a delay, so I'm gonna keep going, but I want to read you guys what is a 1/3 on percentage. All right, so in the meantime, remember, I'm watching the comments, so please help me out in there. In the meantime, we look at the 50% or the half of for that retracement, right? And also the 1/3 of that retracement. And if you take a look at it, usually plays very, 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 very nicely on that retracement, right? 33.333. Shout out to Jesse. Absolutely. But in fact, yeah, supernatural. You are correct. 0.3333. Yes. Any perspective that you guys looked at it, it is correct. Either 0.3 or 33.333. It's just a decimal point that we're playing in here, right? But you are correct. Love the fib retraction. Exactly, my friend. And you got it in here. Look at what Trade Intuition mentioned here. He loved the fib And he says retracement to 0.382, 0.5, or 0.618, right? The most magical numbers. So let's retrace back. Let's go back in here. So the 50% line, of course, that we can tie it together. This is a what? A 0.5 Fibonacci retracement. What is the 1/3, right? Either a 33%, right? Or a 0.3%. It doesn't matter. It just depends. It's just a decimal number based on either if you're measuring from here or measuring from there. At the end of it all, it is the same, right? And then what is the 666? The other third one in here, right? So you're looking at the 0.6 what? 0.618. You see that? Perfect. There is a little bit of a caveat here. Usually when we do thirds, I am just kind of like a guessing the 333 because the Fibonacci number should be 38 what? You got the cheat code in there, 382, right? So it's slightly above here. And not only that, there is a concept that is called the what? The something pocket. Can you guys tell me what kind of pocket? There's actually two, but the most important, most popular. So I know we have a little bit of a delay, but I want you guys to give me a shout in here. I'm also shout you out, guys. If you don't know, give it a try. The point is that we get fun in here, that we get some fun while learning, right? So I'm reading the chat, by the way. So the 0.333, it is just an easy way, right, to call for a 382. And then what we basically look for, it is, all right, what do we say? It is a support. So having a support, yo man, sorry about that. Having a support, we know we have a little bit of a wiggle room in between those support lines, right? And you guys are fantastic. The hot pocket, you say, the golden pocket. Yes, absolutely. You can also call it the hot pocket, the golden pocket. Absolutely. So we're talking about the golden pocket because there's another pocket in here, which is slightly psychological number. We'll learn about that. We're not going to be nerding as much. But as you know, just drawing a simple box, it is a Fibonacci number. So basically, we look at a box, your 50% retracement, your 1/3 retracement, and you know that you have a wiggle room because this is a 333 instead of 382, sorry, right? So just like that, guys, you already know how to do Fibonacci retracement without any and all of those crazy lines out there, right? Now, let's go and do what we're here for, which is specific trading, which is advanced trading, which is understanding in depth your tool so you can also find new ways to use it, right? That's why is this important. That's why this course goes from hero to zero to hero, not hero to zero, sorry, to zero to hero, right? Because we first learn how to do stuff and then we understand in a much deeper personal way those tools, right? So what's the other pocket, OC? The other pocket, it is the platinum pocket. So it's another area, it's a little more spaced out area where there is a reaction in there, and that has to do with volatility and also with, I would say just volatility, because sometimes we just go higher above the, and it's right away, right next to the golden pocket. So sometimes we overshoot, we come back down to a micro, Fibonacci tool, and then in between those golden pockets, and I'll show you in a minute, you find that platinum pocket. Like for example, let's just say that I first go and analyze this, right? But then let's just say OC told me that he prefers to do it on the breakout retest. How would that look like? Remember that we're golden pocket somewhere around there, right? So how would that look like if I overlay my boxes? You see that your 50% and then your 1/3 create an overlapping zone in here, and in here. You see that? So this would be a double 50% retracement, and look at how well that played out. You see that? And then look at these two, and let's just add them like this: horizontal here, and of course horizontal there, right? Look at how well those overlappings played out. What if you go in here, breakout retest to the top again? Where is your 50 now? You see? What is your 1/3 now? So you see how now, as we keep pushing more Fibonacci into Fibonacci's, right? Fibonacci inceptions, we create a much stronger pocket, right? Side pocket, pickpocket. He's funny pocket. Love it, bro. Love it. Whatever pocket they are. I don't know. Whatever pocket, guys. Whatever pocket. Let me know. So as you see, this is just a mathematical. I call it mathematical porn because it's just. I mean, it's just not something that really gets you anything. It's just like, you know, you just do it for more, you know, just to see how that over mathematical things get you to, right? But yeah, coming to what's next in here, let's actually bring up our setup. And for that, I have already a setup prepared because I don't want to spoil you the most difficult part or the most confusing part of drawing a retracement, right? So let's get started first by understanding what kind of points we're going to be adding. The points that we're going to be adding are going to be, of course, the 1 + 1 or the 0 point, right? Depending where you're starting. You can start at the 0. Where is my thing? Here we go. You can start at the 0, you can start at the 1. And remember, between 0 and 1, there's infinite amount of numbers. How so? 0.1 or 0.000000000, right? Or 0.1, 0.2, 0.3, 0.4, 0.5, 0.99999999999 until when are you going to get to 1? Never, ever, 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 right? So depending on your starting point, either 1 or 0, that's where you just basically define your order of magnitude. You can forget about that. It's just mathematical over-explanation, right? But the point is, since this is how TradingView and we're used to using it, just so you know, in the architecture world, and that's why it bended my mind at the beginning, we start at an order of magnitude of 1, right? And then we do full order of magnitudes. In trading, for some reason, don't ask me why, I haven't investigated that. And I haven't because I'm kind of like I'm mad at it. So we start at 0 order of magnitude. And then we go decimal points of magnitude, just so you know, until we get to 1. And then for some other strange reason, we go in 1 point order of magnitude. So my theory behind this, and again, this is a theory because I have not yet investigated that far, it is that your wave or your main trend is going to be defined in here. So when you're doing 1 point, let's just say, let's get started first with the actual numbers that we're going to be punching in. So 0.236, right? Oops, dyslexia, that's like 236. Then 0.382. Then 0.50 or 0.5. Then 0.618. And this is our golden pocket right here. And then between the 0.618 and 0.65. And then this is our platinum pocket, 0.786, right? And then finally 0.887. This is theoretically our first magnitude, order of magnitude, all right? Our 0. When we can do extensions, because we can force retracement into extensions, If you add, instead of 0, if you add 1, 2, 3, 6, 1, 3, 8, 2, 1, 6, 1, 8, 1, 65, we're going to be pushing the tool to give you extensions for the future, both to the upside or to the downside, right? So I think this is just a classification number, and we're going to be seeing an example of that on how this tool works, because I believe, I know this was created for Pine scripters and also, mathematical geniuses, not just geometrical guys just playing out with lines, right? So, sorry, architects, but that is the truth. So, having said that, let's go ahead and configure it. So, from the top down, 1, 2, 3, here's going to be our Fibonacci retracement. If you don't see it, click the little side button here. And the first one is going to be Fibonacci retracement. Let's click it. Let's add it however you want to add it. And then let's double click on it, right? Right here, you already have the numbers that I was talking about. 0.236, all right? Well, starting at our order of magnitude at 0, 236, 382, 0.5, 618, 0.65, and let's change that just because we said so. Because remember, 618 and 65, there's a golden pocket, so why not? Let's add them something like looks like the gold, right? Golden. Here it is, perfect. And then what will we jump to? 786, right? 786, it's gonna be our platinum. We can actually come like a do for sort of like a platinum, I don't know, white-ish line, right? And then finally, 786, what is up next? 887, all right? And then we do another kind of like a platinum thing, I don't know, like that, whatever. And then, just for exercise, let's do the 618, remember the golden pocket, 618, and the 65, but with a 1 in there, right? Let's do extra hot, because that is our hot pocket. Let's just call it like that, right? I'm just making this up, just so you know, right? So, just this is just a proof of concept, right? We'll see that in a second. But let's click OK. We already have it configured. As you can see, the 2 magnitude, which is a 618, again, 6180, 6181, and 6182 is turned off, and we're going to leave it as is for now. All right, let's click OK, and this gives us what? A Fibonacci retracement tool. It's starting at your 0 point. All right, let me explain how you set up your Fibonacci. But so far, let me show you that we have our first golden pocket right here. And then look at that, we can, based on our order of magnitude, which in this case was 0618, and now this is 1618. And if we do the 2, let's do it, why not? 2, where is it? 2618 and 265, right? Let's click OK. Let's put this, I don't know, pink. Let's do it like that. And then finally 265, pink, whatever. Click OK, and look at that. Now it's giving us in between. You see that? In between golden pockets. So if you ask me, I would rather start measuring at 1 and then with the same tool do 0 for projection up and 2 for projection down. But that's why we have another tool, which is projection of Fibonacci, right? So, but so far we're just gonna be in this class, we're just gonna be concentrating on the retracements, right? So let's just turn off the 2 order of magnitude in here. And do we have any other one? Yeah, this one that we changed it before. Perfect, that's it. And we just leave it as it. Already a good night to you. Thank you, my friend. Thank you so much for jumping in. I'm gonna miss you, my friend. Thanks, buddy. So let's go here. And I have it prepared. There we go. Let's go to the daily just to make it a little bit better or a little bit easier, right? And here it is. Perfect. You'll see that I have my cheat code in here. But come on, let's not spoil that for now. Let me explain to you how do we add stuff in here, right? So first of all, the total length, or how do we get the percentage? We already have basically looked into it. It is the total length, so the box, the full box, right, divided between just the percentages. So what is the percentage? Where we come from, the little boxes between, or divided by the first order of magnitude, which is 1. That's why we get a 0 point whatever, right? So far, so good. So how do you place those things, right? So, because, I mean, I can go like, all right, for me, I would have gone from top to bottom, and then what? This thing is just, it's just in the middle. How can I mean, can I just stand it? And yes, you can. But also look at what happened if I go the other way around. If I start from the bottom to the top, right? And then maybe, can I project this? Yes, I can. Then let's overlay them. Are they the same or are they not the same? Do they match each other zone? Kind of, but look at the golden pocket. Now the golden pocket, it's very far off because your golden pocket is not your 50%. You see that? So for me, I mean, if you ask me, for me, this is bidirectional or omnidirectional. So I actually, in the past, I know this is not how this tool is supposed to be used, right? But just from one fellow trader to another one, remember that we are entitled to, or I'm telling you guys, exhorting you guys to experiment. Because look at how well this inverted golden pocket act as a resistance, right? I know I have my other platinum pocket in here, but the actual other golden pocket, it played out like a charm. And to break that golden pocket, I broke it all the way to the next golden pocket. Come on, that is amazing, right? Or for me, at least, that is amazing for me. So the correct way to do it, it is depending on what you're gonna be looking for retracement. Let's take right now the current case, right? Remember, retracement. So what is our current line? It is this trend line in here, correct? Now that we know this line, this is a bullish trend, and we're gonna be measuring the retracement of the bullish trend, all right? So how do we place that area? So the first thing that we're going to be finding, it is what we already have, the very bottom. We don't need to guess that. We have it, right? So that's going to be the first point we're going to be looking at. And then we click in here, and then we extend it to what we believe it's the top. So far in here. Quick tip, I can extend it to my right, and then make sure that the gray line is touching the very top of that candle. You see that? That way, I don't need to do this and then having to come in here and extend left or extend right. But if you rather do it like that, maybe using the snapping tool, you can extend right, just so you know. But for me, it is much easier because this is a big ball, right? It really bothers me. So I rather have just a thin line in here and eyeball it like that, right? And then also do the same thing right here. Perfect. And for me, this is good enough. You see that? Where is your 1/3 retracement? 382 and 236. You see that? Perfect. Retracements. All right. So now that we understand how to say that, how do you trace or measure other retracements? Because you can also measure the opposite retracement, right? Let's do that. For example, you know what, with the same area. Oh, we had one here. So right here, if we didn't had nothing from here, so what we do, exactly the same. What is our current trend? This is our current trend. Remember, we don't have this just now or just yet, right? So if this is my current trend, what am I going to be looking for? What it's already there. First, what the known point, which is in this case the top, right? So first, remember Where is your trend? Downtrend. Where is your retracement? Reversed from your or opposite to your trend. So your retracement in this case are going to be going upwards, right? In here, since you have an uptrend, your retracement are going to be going downwards, all right? So, but let's concentrate in here. So at this point, do we know that this is the bottom? Of course not. We don't know that yet because we can keep maybe going downwards or maybe have a flat pause of bearish continuation, right? But that's why we are guessing the possible retracement, because usually when we add the Fibonacci, it's because we have a couple more candles, because we already have a confirmation. What kind of confirmation? Double bottom, sweep of the lows, right? Breakout, retest, big body candle. This is when I start using my Fibonacci retracement. Why? Because I'm putting in here flat positive bullish continuation, which I usually read as a potential higher low, all right? And I'm putting in here a higher high, not quite there, getting this one, but breaking, absolutely breaking my previous higher high. You see that? So when do I decide to use my retracement? Now that I know that I have a confirmation. Yes, it can still be a flat positive bearish continuation. I know this. This could be an upranging that breaks to the downside. I know that, right? But so far, I have my first guess of where gonna be the retracement for maybe take advantage for another short or a push through. All right. So having said that, what is the data that we already have, which is already given, all right, all the way up here. All right. So how do we place our retracement? From here to there, all the way down. And at this point, remember, I extended just to make sure that I'm pairing with this one. And then I extended, and let me just get rid of that box so I can see the tippy top right in here. And I try to catch the very tippy top right there, right? And look at that. Breakthrough going to the what? To the golden pocket. I'm expecting a bounce to 0.5 or better yet, 382, right? And that's it. Easy peasy, right? Lemon squeezy. What do I do then? I look for how my oscillator plays out for a possible reversal maybe at that point. So what am I going to be looking for? Maybe I'm going to be looking for a top, right? A top diamonds, a peak performance diamond at this big retracement or this big resistance zone, right? So once again, let's do that exercise, and I got you already the measurements in here. Perfect, right? And the other measurement in here. And why am I doing this? Why did I have them up there? I'm gonna get there into a second, but let's do first the recap. If we want to measure the retracement up, only Phoebes Elephant says, love it. All right, so if we want to trace the retracement up, first the given point, and then the speculation point. Perfect? So first the given point, last the speculation point, and I overextend here to make sure I have a clean picture, and I do the same in here with a clear picture. And look at that. It's also giving me order of magnitude for my next wave possibilities. All right? If for the other way around, let's just go this way. Why not? Let's do 10x. Let's play it. Look at that. Retrace. Perfect. To the very first line. All right. We are in current time. Let me just get rid of this in here so we have a cleaner picture. I think that's it. So if we want to measure the retracement, why the retracement down? Because our trend was to the upside. And look at that. You can actually kind of have as a cheat code the colors that your linear regression is giving you. So where are we? We are blue already. So we're looking for retracement bearish, right? So in this case, we are green already. So we're looking for retracement bullish, right? So far at this point, we're looking for retracement bearish, all right? So what else can we do here? Road, Do Crypto, what's up? What is up, brother? Welcome. All right, so what can we do in here? Well, what do we have? Do we know for a fact that this is the top? Of course not. We don't know that this is the top. Do we know for a fact that this was a localized bottom? Yeah, because we're already all the way up here, right? So first, remember, first the known point, right? With my Fibonacci retracement, first the known point, and then my speculation point in here. So once again, I overshoot. So I'm looking at the line and the price action, and then I also overshoot, and then I use the line with the price action. All right. So this is the correct way to position your retracement, your Fibonacci retracement. So look at here. What are we expecting maybe? Well, to hold the 236, and in worst case scenario, the 130 here before looking at the, at the 50%, come on, 50% or golden pocket. Look at where is your platinum pocket. Your platinum pocket usually calls for a major double bottom or not losing the previous lows and still pushing to the upside. All right. So that's why the platinum pocket is very important, because instead of losing it all in here, we still technically do a higher low, right? Which could be potential meaning of a huge range to the upside. You see that? All right. So now let me just get rid of this in here, and let's bring up our setups in here, our hidden Fibonacci tools, right? So let me ask you a question. This is number one. Let's see if you remember. This is number one. 0 is at the bottom, and 1 is at the top. My golden pocket, it's low. What is it measuring? Number one, does it measure bullish trend or does it measure bearish trend? One, what does one measures? Let me know. Waiting for your answer in the side chat, guys. We're running out of time, so let's be a little bit quicker here. Anyone? You guys know this. It's easy. It's easy. Giving a little second for you guys to respond. Come on, you guys got this. Number one, does it measure bullish or bearish? Lunar, what's up, brother? Welcome. Bearish, exactly. We measure the bearish trend, right, for bullish retracement. Perfect. And then this other one measures the bullish trend for bearish retracement. Perfect. Love it, guys. Thank you for your participation. Now, one more thing. When we overlap those like this, look at the numbers, how they look. They're unreadable. All right. And this is the next part what I want to show you this. If we go over here, you go all the way down here, you have your price or your level values, and you can put them to your left, center, or right. If you see, I set them to the right, but in this case, I'm going to left them to the left, and then click OK, and finally grab this one and set them to the right. That way you can place them one next to each other and maybe use them as a support and resistance. All right, guys. So far we have defined, we have understand where the Fibonacci comes from, right? How 1 turns into 2, how 2 plus 1 turns into 3, how 3 plus 2 turns into 5, and how those represent an order of magnitude based on the unit number 1 divided by the growth curve, which is a percentage base, right? Do you not understand anything? Don't worry. Neither do I. I'm reading here. No, don't, don't believe that. I am telling it because I do understand it. But at the point, if you don't understand that, that's fine. I don't care. You are good. You can still use Fibonacci. Remember what I've been showing you in the past classes, right? That you just drew your box. And guys, this easy peasy box is already a Fibonacci retracement. I started introducing you to the Fibonacci retracement this way because it is a very, very simple way to use it, right? So it doesn't get intimidated. You understand what is a 1/3, and then also you understand what is a 1/2, right? And you understand that those 2 points are one of the important retracement for bullish continuation, right? In that case, well, then we just have added 2-3 more lines and then give them a name, all right? So easy peasy, guys. Do not get confusing here, right? Do not get overwhelmed. If you get overwhelmed, remember you can always draw your box at the bottom and at the top. And as always, we always start with a known point to measure the retracement of the known trend. All right? So easy peasy lemon squeezy, guys. Hopefully this has matched with you. Hopefully this has opened up that feeling of trying to trade. Experiment, guys. Experiment. There is no a right or wrong way to use it, guys. If it works for you backwards, use it backwards. The only thing that I care is that you make money and that you understand what are you doing. And in case of you want to using it correctly or the way that traditional traders use it, you know why they use it that way and where does it came from, so you can experiment with new and exciting ways to use it, right? So guys, thanks so much for joining, and as always, see you guys, if YouTube lets me, see you guys tomorrow, and have a great rest of your day, guys.